But the most important thing is not actually paying the tax, is to know when you may fall back into this category, because if you're required to file this report and you don't do so, the penalties can be extremely high and very expensive. The Canadian government have introduced a new tax in January of 2022 called the Underused Housing Tax. The first filing date is coming up in 2023 May. Now recently I've been getting a lot of questions and also even invitation to tax seminars on this tax rule. A lot of people are worried and also confused whether they're counted as an affected owner and if they have to pay additional tax on their residential properties. So for this week I want to do a quick video on who is an affected owner, who will have to file this tax return, and if you have to pay additional tax or not. Now before we start, as always, help us like this video and also join our private Facebook group if you haven't already. We have close to 5,000 members, and in there you can get additional contents and also ask any financial questions inside. So first let's talk about what is underused housing tax. Now under this new tax, certain owners of residential properties in Canada would now require to file a specific return with CRA every year, and they may be required to pay additional tax on top. Unless you are exempt from the list that we'll talk about later on, the tax will be 1% of the fair market value of your properties. This tax is in addition to the vacancy tax that have been introduced in Ontario or BC. So if you fall into both vacancy tax and the new UHT, you may be required to pay up to 2% of your fair market value across all your residential properties, which can be very, very hefty. But just to preface, if you're watching this video, I can safely say that 99% of you would not be even on the list. You would not even have to file anything with CRA. And of those people that need to file something with CRA, 99% of you would not have to pay that 1% tax on UHT. But the most important thing is not actually paying the tax, is to know when you may fall back into this category, because if you're required to file this report and you don't do so, the penalties can be extremely high and very expensive. Now, in addition to the video, I've also provided a link in the description below that takes you to a flow chart on whether you are affected, if you have to just file the report, or you have to file the report and pay the tax. If you're interested, check out the link in the description below. So next, let's talk about some terms we need to understand before we dive into the tax rule. And the two main terms here to understand is what is considered as a residential property and who is considered as an owner of this property. For residential property, this is pretty straightforward. Anything on this list, as you can see, is considered a residential property. As for owner, they're targeting the registered owner, not the beneficial owner. In addition, these type of ownership also count as well. Alright, so if you are one of the ownership type on the list and you own something that's considered as a residential property, you may be affected. So next, let's talk about who is excluded from the list right away. The following people are all excluded and they do not have to file this report with CRA. First, if they're a government of Canada or a province or an agent of either one. Next, if you're Canadian citizens or permanent residents. This basically eliminates most people. That's why I said 99% of you watching this, you're probably not even on the list. But do not confuse this with you owning a property inside your corporation. You could be a citizen or permanent resident, but if you own a residential property inside your corporation, you are still on the list. Moving on, for corporations incorporated in Canada who share or traded on a public Canadian stock exchange, you're also excluded. Entities who own residential properties as trustee of a mutual fund trust, real estate investment trust, or specific investment flow-through trusts. So basically, REITs are also off the list. If you're registered charities, cooperative housing corporations, hospital or school authorities, municipalities, and indigenous governing bodies, you're also not on this list. Now, if you're not on any of those categories I just mentioned, then you would be considered as an affected owner. An affected owner will have to file a report with CRA, regardless if you have to pay the tax or not. The following categories will be considered as an affected owner. If you are non-citizen or non-PR, or if you're citizen or PR but owns property as partner in a partnership or as trustee of a trust, other than trustees or representative of deceased individuals. Or if a corporation is not incorporated in Canada, or lastly, if you are a private corporation in Canada with or without share capital. So be careful if you're an individual owner right now, but you're looking to roll your real estate into a private corporation for investment purpose. You may now have put yourself back on this list and now you need to file that report with CRA. Now, keep in mind for life tenancies, life lease, or long-term tenants, it is the tenant or leaseholder's responsibility to file this with CRA, not the owner of this property. And if there are more than one person as an affected owner but both have ownership in a property, then you both need to do that filing. It's not just one person. And if you end up having to pay the tax, each of you will pay a proportion of your ownership to CRA. Lastly, if you own multiple properties and you are considered as an affected owner, you may end up having to pay tax across all your residential property. So this part you have to be very careful about. Now by here, if you're an affected owner, you might be very worried and thinking that, does that mean you have to pay that 1% tax right now? Well, not necessary. Even if you're an affected owner, which means you have to file the tax, you may not have to pay. There's a lot of exemption inside as well. So next, let's talk about who is exempt from paying this tax. The following people would need to file but not pay the 1% tax. If you're a specific Canadian corporation, which means by December 31st, less than 10% of company is controlled by a foreign individual or corporation, you're now exempt from paying this tax. Next, if you're a partner or trustee of a specific Canadian corporation, you're also exempt. Also, for affected owners who have bought a property for last year but did not own the same one for the last 9 years prior to this, you're also exempt. Basically, this is to target people who are trying to change hands to escape this tax. Next, if you're a deceased owner, you're exempt as well. And also, anyone who have owned a property with a deceased owner if the deceased owner have owned more than 25% of properties. And finally, the rep of a deceased owner also is exempt from paying the tax. Now, if somehow by now you're still not exempt from paying this tax, don't worry, there's even more exemption coming up, and now it's the residential properties exemption. And in here, there are a couple categories of exemption. Let's start with the first one, which is availability exemption. If this property you're filing a report on is not suitable year-round for living, you're exempted. If the property is seasonally not accessible because entrance is not maintained all year round, uninhabitable for 60 consecutive days due to a natural disaster or hazardous condition, under renovation for at least 120 consecutive days if we haven't used this exemption for the last 9 years, new build that is not done by April of calendar year or is complete, but within the same year you put it on sale and it's never occupied. All those will fall into the availability exemption. Furthermore, you also have something called vacation exemption. So there are eligible areas within which if affected owner or spouse uses the property for at least 28 days of a year, then it is exempt. CRA has a link that tells you what is considered as an eligible area, so I'll link that in the description below, you can check that out. Moving on, another exemption is a primary resident exemption. If the affected owner or spouse uses it as a primary residence, then it may be exempt from tax. Or if a child is a student of a designated learning institution, then you can also be exempt. Finally, there is the qualifying occupancy exemption. Properties are also exempt from the tax if it is occupied for 180 days or more by the following people: arm's length third party under agreement, so basically strangers; related party under written agreement where fair rent is paid, so if you're renting at a market price to family; owners or spouse with Canadian working permits; or owner, spouse, common law, or children who are Canadian citizens. So as you can see, while it's more common for people to be affected owner, meaning you have to file this report with CRA, it is very difficult to skip all those exemptions and have to end up paying that 1% tax. However, if you're in an unfortunate situation where you do end up having to pay this tax, let's talk about how is this calculated. So basically, it is 1% of either the assessed price or on the fair market value. For assessed price, it's based on greater of two things: the most recent assessed value by the government agency or the most recent sale value. For fair market value, it has to be appraisal done by a third-party certified appraiser that is arm's length, so you cannot hire your cousin even though they're certified. It has to be someone that is a complete stranger. And the value will have to be dated between January 1st of last year to April 30th of the following years. The fair market value method may make sense if you have a mixed-use building where only a part of that building is used as a residential property. Now finally, let's talk about the penalty of failure to report or pay the tax. And this is the part you need to be very careful about, because it's very rare for you to have to pay the tax, but it might be much more common that you will have to file this with CRA, and by not doing so, it's going to get very expensive for you. So the penalty will be 5% of the tax for the calendar year and 3% of the tax times number of months that is past due. And if an affected owner, even though you qualify for exemption, fail to report by December 31st of the following year, then they lose all the exemption, and you would now have to pay the tax, whereas you didn't have to if you had filed on time. In addition, extra penalty or interest may apply if you fail to report either because of omission or just misrepresentation. So as you can see, you could go from someone that is just affected, just have to file the report, but you forgot to do so, and now you may end up having to pay the 1% tax plus all those extra percentage on top. So be very, very careful if you're an affected owner. Please, please, please make sure you're filing this report on time with the CRA. So finally, let's talk about the filing. What is required? Now you need to provide your SIN number, obviously, but on top of that, you also have to provide the list of things you can see on the screen. And honestly, if you're not sure, I would highly encourage you to work with a CPA. They would have studied this by now and they know exactly if you're affected or not, and if you have to file this report, how to file it to do it correctly. Just pay the money, work with a CPA. It is really not worth trying to do this yourself because, like I said, the penalty is extremely hefty. But yeah, like I said, by now it's pretty clear that basically not a lot of people will have to pay that 1% at the end, unless you're someone that is not a resident here, you bought a house, you left it empty, you don't even rent it out to people, you don't even use it for yourself, then yeah, you would have to pay that 1% tax. But for everyone else, just worry that if you're an affected owner, and if so, make sure you file that report. Alright, so that's everything I have for today. It's going to be a quicker video. Let me know what you think in the comment down below. Are you an affected owner? Do you know someone that is? And do you know someone that might have to end up paying the tax? Share with me in the comment down below. If you like these kind of videos, I do try to upload them once every Tuesday, 8:30 EST, and in between I'll have different shorts to share different types of information. Make sure you subscribe and hit the bell button to get all the notifications in the future. Alright, this is Jackie Ko. I hope you found this interesting. I'll see you next video. Bye!